JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 6th of October 2020. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always guys, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, a quick update on what's happening here with Nikkei. Nikkei closed today in the positive territory again. But still kind of it's on its way, I would say, to this level that I talked about recently when I was discussing Nikkei, and basically what I was saying that in order to get a little bit more excited maybe here from the medium-term perspective with the upside, then of course we need to see a break of this 23,580 zone here, and as you can see, it continues to act as a good area of resistance. We did get an overshoot here once last week, but the index was not able to close above it, so that's why we would prefer to kind of wait for a nice clear close above this area in order to get a little bit more excited about higher levels. So that's why keep your eyes on this one. Could be interesting, could be quite interesting, but of course up until this area here, the index could continue rising, and yep, we could see this one pushing further north here, but like I said, be very careful near this barrier because a break of this barrier is required in order to get a little bit more comfortable with higher levels in the near term. Now, in terms of the downside, probably for now I'll take a little bit of a conservative approach here and wait for a drop below the 23,040 level in order to aim for lower levels. But to be honest, if we do see a strong reversal back down, then I'll reevaluate this again later. Now, Shanghai's composite is not open. Hang Seng, Hong Kong's Hang Seng. In China we do have the holiday, so yep, China is celebrating its national day, so that's why all the Chinese indices are closed, but Hong Kong's market is open, and here you can see the index, yes, is trading slightly in the positive territory. However, as you can see, it still remains below this 21-day EMA. Now, previously I looked at this one, and last time I looked at this one was on a break here of this upside line, but let me actually, what I'm gonna do, let me just get rid of all the drawings here. Let me get started and start fresh. Now, first of all, of course, after the index found good support near this level right here, near the 23,124 zone on at the end of September, it started pushing higher, but it's currently, as you can see, kind of stalling slightly below the 21-day EMA. Now, the problem here is that let's see if it's gonna do this, if this 21-day EMA gonna do the same thing as it did here, for example, in around mid-September, where it acted as a good resistance zone. So that's why we'll be very careful. Of course, on one hand, from the very short-term perspective, you can see that yes, this index is kind of trading right now slightly above this downside line taken from the high of the 31st of August. So in a way, there is a possibility for this one maybe to pop a little bit higher, maybe even overcome this 21-day EMA and dip and travel further north. However, still remain cautious because we do have this other downside resistance line here taken from the high of the 7th of July, and in a way it could kind of keep the price lower, but nevertheless this area right here is quite a decent one. So basically there is a possibility to see this one moving higher, especially if it climbs above this 21-day EMA, and especially if it stays, if the daily candle remains above that area. So let's see how all this is going to play out. But yeah, for now like I said, there is a possibility for this one to move higher, but let's wait for that a break of that 21-day EMA, and then yep, we'll get a little bit more excited about the upside. Now in terms of the downside, well, again, similar story like as with Nikkei. We'll take a bit of a conservative approach, and we'll wait for a drop below this low here, the lowest point of September, near the 23,124 zone, and then of course the next target here could be this one right here, the lowest point of May of this year, and which is around the 25,520 territory, roughly around there. But again, for now, like I said, there is a possibility for this one to pop higher, but we're waiting for that push above this 21-day EMA because we don't want to see the same scenario as we had here around around on the 16th of September. Now jumping into the German DAX, and here the index pushed higher. That's great news, of course. Yes, yesterday it closed in the positive territory. However, still, as you can see, this barrier here, this 12,873 territory that I keep talking about over the past few videos, it still is acting as a good resistance zone. So although we didn't really quite reach it, you can see that the index almost reached the 21-day EMA. So basically, in other words, we need that confirmation break above this area in order to get excited about higher levels. Until then, if it continues to struggle to overcome this, then, well, I mean, we can see that the 21-day EMA is acting as a good resistance zone. So that's why for now, let's take a very careful approach. Yes, we will probably remain cautiously bullish, but just like I said, wait for that confirmation break. Ideally a daily close could do the trick here for more buyers, but if we get a nice break above it straight away, then of course try to protect yourselves with a stop loss just in case this suddenly reverses back down and pushes lower. So jumping into another index, and this one is a dollar index. Now here, first of all, let me get rid of this arrow. So this is no longer valid because yesterday we had a drop here below this 21-day EMA, and in a way there could be a possibility for this one to push further south. This is what I talked about yesterday as well, that if we get a drop below this area, then, well, it could open the door towards, first of all, towards this 92.79 zone, which, as you can see, acted as a fantastic area of support here between September 15th and 21st. And if, of course, if that fails to provide support, then yes, further declines are possible. However, now here, the little problem here with the downside is that, as you can see, currently looking at the RSI here on our daily chart, you can see that yes, the RSI is testing this upside line, I would say, but it hasn't broken it yet. So that's why be very careful for now. That's why, guys, it's a bit of a tricky situation, because if this kind of provides, if this gives support somehow, and this here, the index here could reverse and push higher again. So for now, like I said, from the technical side, yes, there is a possibility for this one to move lower, but if it's a drop of the RSI below this upside line could kind of strengthen that idea as well. But like I said, always have a bit of an element of the doubt, and in a way, what could happen here, it could reverse back up here, maybe test this 93.81 zone from underneath, and then move back down again. So like I said, it's a bit of a tricky one right now. Yes, for now everything's kind of seems to be pointing to the downside. However, like I said, the RSI is kind of resting right now on its upside line. So like I said, let's see how this is going to play out. But if you want to look at lower levels, for example, today, what you could do, and this is a daily chart just to remind you, you could keep an eye on the yesterday's low, which is around the 93.37 zone. And or you could actually take a look at the current low of today, and that's roughly around the 93.35. So a nice good drop below this would confirm a forthcoming lower low, and further declines here could be possible. So basically something like this could play out. So that's how you could kind of protect yourself a little bit here. If it rebounds, not saying that this could turn suddenly everything positive, but we'll keep an eye on this downside line taken from the high of the 20th of March, and we need, in order to aim for higher levels, in order to get comfortable with that idea, a break of this 94.65 level is required. So that's why we'll take a bit of a careful approach here with the DXY. Gold, and this is where I'm saying that we'll take a very careful approach with DXY, because here you can see that gold is also at a very interesting spot. So yesterday the commodity pushed higher. This is exactly what I was talking about, but as you can see, it also found good resistance near this downside line taken from the high of the 7th of August. So now let's see what the dollar will do, because if the dollar suddenly strengthens, then yep, gold could work out this scenario that I showed you previously, where if this downside line provides resistance, then yep, another round of selling here could be possible, at least going back maybe towards the lows of the lowest point of September, near the 1848 zone, roughly around there. Of course, with the upside here, it's also a bit tricky. If we get a break through this downside line, this taken from the high of the 7th of August, we do have another downside line, also a tentative one, but nevertheless a downside line taken from the high of the 18th of August. So that's the reason why I have my upside scenario from somewhere around here, 1972, which is marked near the highs of the 15th and the 16th of September. That could be that safe game. However, of course, if you're a little bit on the riskier side, then keep your eyes on this downside line, this first one, the steeper one. If that gets broken, then it could open the door towards this other downside line. So if you're looking for something like that, then yep, you might maybe squeeze something out of this move here. But again, if you're a little bit more on the cautious side, then like I said, wait for a violation of both of these two downside lines, and then we could start maybe considering a bit of a move higher. I might not wait for a push above this 1972 zone. Maybe I could start looking at some higher levels somewhere around here, but again, depending on the move and how strong or how weak the break will be, then yep, I'll take it from there. Ripple. So Ripple it seems that it wants to travel higher. It seems that it wants to push above this downside line, and it does that right now, and it is doing that right now, but somehow it's currently getting a hold of here near this downside line. However, if we kind of push away all the doubts, just look at the pure kind of technical picture, yes, the fact that it's breaking now this downside line is great for the bulls. More of them could start joining in, but what I don't want to see here is a false breakout. So basically, what I would say, wait for a daily candle to either stay above this downside line or below it, because again, for now it's just sitting bang on the line. So to be honest, like I said, it could end up being a false breakout, and that's why probably for now I'll just continue observing it. I'll take a bit of a neutral stand here, but if we get a nice daily close above this area, then of course, yep, I'll start looking at some further upside. Jumping into a few pairs now, Aud Jpy. So last week I looked at this one, and you can see by the shifted kind of candles already from this arrow. Last week I talked about this idea where I was saying that if this 21-day EMA does provide resistance, then we could see a nice round of selling again. So it initially was providing resistance, but then failed. Yesterday we saw a break above it, and the pair moved higher, but as you can see, today the pair is kind of tested one of my levels here, the 76.12 zone, which I've talked about as well, because what I was saying, that a break above this area could open the door towards higher levels. We did have a small little false breakout, and you can see now we're sliding back down. So again, for now, what I'm going to do here is, first of all, I'm going to change a few levels. I'm going to recycle one of these arrows, and of course, with the upside, the same idea remains. I need to see a nice good daily candle kind of remaining above the 76.12 zone in order to get a little bit more excited with the upside. Now, in terms of the downside, first of all, I'll get rid of this level, and what I'm going to do here is I'm going to keep an eye on yesterday's low. Now, yesterday's low here was around 75.37 zone, so a nice good drop below it may kind of open the door towards slightly lower areas. But here you can see that we do have this 100-day EMA. 100-day EMA, which also kind of almost kind of coincides here with this 74.83 zone marked by the low of the 30th of July, and which could kind of provide a temporary hold up. But if the slide continues, then of course it may kind of send the pair towards this 200-day EMA, or this this 74 territory, which is not far from the lowest point of September. But again, all that is in the scenario if we get a drop below yesterday's low. However, for now, we can see that yes, the pair is declining a little bit, but it might continue oscillating somewhere around here, around this 21-day EMA, and it may actually reverse back up here again. But again, with the upside, as I said before, we need to see a nice good push above the 76.12 territory first. USD JPY quick update. So yesterday the pair made its way higher, as you can see. I talked about this one yesterday, and what I was saying, that we would like to see a nice good daily candle remaining above this 105.70 zone. So it did fractionally, it wasn't really a strong move here, but there is some positivity in all this. So let's see if this pair can actually kind of reverse and push higher again. So if you want to look at something a little bit, if you want to look at some higher levels, but from the a little bit cautious perspective, wait for a push above yesterday's high, and then just it would kind of confirm this idea of seeing a further move north. At the moment, yes, the pair is retracing, but again, we could see this as a temporary correction for now, especially if even if it travels lower further down here, but remains above the 21-day EMA. Then like I said, keep your eyes on the on this 21-day EMA, and if it could reverse back up, but all eyes are of course on the yesterday's high near the 105.79 zone, and then or in a way you could round it up towards the 80 territory. But if, to be honest, if it starts reversing back above this 105.70 zone, now this is where it could start looking quite attractive for the buyers again. But again, of course, at this point, guys, still don't forget to have your stop loss in place just in case this somehow rolls over and starts dropping heavily to the moving heavily to the downside, and if it travels below this 105.30 territory, now this is where lower levels could be met. USD CAD, now here it's a bit of a mess here, I would say. So one thing for sure, last time when I looked at this one, and if you remember, like a couple of weeks ago around mid-October, we were still kind of trading not far from this downside line, and I was saying that if it gets broken, then yep, this could open the door towards higher levels, and maybe even towards this other downside line taken from the high of the 31st of March. We missed that line by just a few pips, I would say, but what's interesting here, this 100-day EMA provided decent resistance, and from which you can see the pair kind of drifted back down. Now, to be honest, let me just remove all the lines here because it's kind of in the way right now. So I removed the downside lines for now, so that's why I'm going to look at it from the short-term perspective. Now the problem here is with the upside is that the pair is kind of right now fluctuating just around this upside support line taken from the low of the 1st of September, and in a way it's too early to talk about the downside, because in a way it might reverse here and push higher again. I'm talking about a short term, from the short-term perspective, of course, but in order to, let's say, start looking at the upside again, or should I say slightly higher levels again, a break above this level would be needed. Not to mention the 100-day EMA, but also about a break above this 1.3418 zone, which, as you can see, continued to provide decent resistance here, and that's what we need to see in order to kind of get excited about maybe higher levels. At the same time, the rate could be placed also above the 200-day EMA, so probably by the time this pair could reverse and push higher again here, this 200-day EMA might coincide with this level. Now, in terms of course, the downside, now at the moment, like I said, yes, we are trading below the 21-day EMA, fractionally below this upside line, but again, it's a tentative one. So what you could do here is you could take a bit of a careful approach, and maybe more of a conservative approach, and keep your eyes on this level, the 1.3128, marked by the low of the 16th of September. Now, a nice drop below this could, yep, signal further declines, and we could maybe start seeing this one moving towards the lowest point of September near the 1.2995 zone, and then we'll take it from there. If you're a little bit looking for something more short-term, then watch out for this little level right here, where the pair is currently or should I say, where the pair today found support. And that's roughly around the 1.3240 zone, and that's marked by the high of the 8th of September here, not far from the high of the 17th of September here as well. So as you can see, previously this area acted as a good resistance level. Now now it is taking the role of support, but if that gets broken, now this is, like I said, this is where it could end up being very interesting for the sellers here, guys. So keep your eyes on this one. So let's see how all this is going to play out. But as I said, with the upside, I'm not going to look at any higher levels until we get a nice break here above this barrier, the 1.3418 and this 200-day EMA. But even then, I'll pick up on one of those downside lines which I removed earlier. So like I said, it's an interesting pair. Let's keep an eye on it, and let's see how all this is going to play out. Quick update on Gbp Usd. Not much. I'm not going to spend much time on this one. Still the same idea remains. In order to aim for some higher levels, a push above this 1.30 territory is required, and ideally a daily candle remaining above this area could do the trick for more buyers. So that's why for now it's a tricky one. The pair is getting a hold up near the psychological 130 zone, and that's understandable. Good level to watch. So let's see if this can actually, if the bulls can have enough steam to push this one higher. Let's see if it's going to be a pound move or actually a weaker dollar move. So so yeah, that's going to be quite interesting to see. But nevertheless, a nice good pop above this 1.30 territory could open the door towards higher levels. And finally, Euro USD. So the pair managed to end up being above this downside line I talked about yesterday and last week as well. So in a way, that's all this is good news here for the buyers. At the moment, yes, again, similar story like with the rest of the pairs here. It's great, yes, wonderful news for the buyers. Let's see if this pair actually can travel further north. Now, you can see that today, this morning, the pair tried to overcome the high of yesterday near the 1.1797 zone, but really kind of failed to remain above it. So, and then kind of drift back down. So what will I need here to see today is at least a push above this 1.1797 zone, or in a way we could round it up towards the 1.18 zone. A nice good pop above the 1.18 territory could open the door towards higher levels. So keep your eyes on that one, guys. And of course, with the downside, a move back below this downside line could signal that not all is good here in the bull block, and yep, lower levels could be met. But again, for now, like I said, it's a very tricky situation. I'll pick up on this one in my trader's tea time. Keep your eyes on that one later on. That's going to come out at 13:15 GMT time. So yep, join me then. Like I said, I'll pick up on some of these instruments, maybe some new ones, and we'll take it from there, guys. I'll have to wrap it up here. Thank you very much for watching and listening, and have a wonderful trading day, guys. Thank you very much, and bye-bye.